Coming up today, stocks rally higher, led by NVDA going into earnings tomorrow. Ukraine attacks inside Russia, all the market's reactions, Bitcoin hits an all-time high, the continued election effects, and Michael Saylor's advice for Warren Buffett. You're going to enjoy this one, guys. Let's go. And welcome back, everybody, to the Daily Market Review. As per usual, global financial markets, keeping it interesting for us traders and investors here. Started off this morning on worrying news. Just going down to a 5-minute chart here, that Ukraine had attacked inside of Russia. Got markets really nervous coming into the open. A lot of indices and sectors off more than 1%. However, we bottomed out right before the market opened, pretty much defended the open and rallied right into the end of the day. Same deal on the Russell 2000. Just held that opened and powered higher for the rest of the day. Actually giving us a big bullish engulfing candle. So not even the growing threat of World War III, nuclear war, can hold this stock market down for too long. But I'll get more into that a bit later on. And stick with me today because later on in this video, I'll share with you guys some questions I received about my new swing trading alert service that I'll give all the answers to later. But first, let's just talk about some of the most important stories and markets out there today. NVIDIA having a really good day in front of their earnings tomorrow, up almost 5% on the day. Like the market's already seen the results. Should be expecting another blowout quarter. If not, this market will be really disappointed now that we're just a few points off all-time highs here. And so what the street will really be looking for is what the demand is for the new Blackwell GPU chip. However, I'd say more importantly is how's production going? Do they foresee any more hiccups? We did get rumors yesterday they're having a problem with their GPUs overheating server racks. So like I've been saying, they don't have a demand problem. They can pretty much sell whatever they make. It could be more of a supply problem. So for the current quarter, Goldman Sachs is expecting $34.3 billion in revenue. That's up more than 80% year over year. But they really won't be ramping up Blackwell GPU production until Q1 next year. But they're already taking orders for it, which I'd say they've probably taken as many as they could possibly give out. It all comes down to whether they can fulfill those orders. Some estimates looking at potentially $70 billion in sales of Blackwell GPU chips next year on monster margins as well. And so like I said, the market's already running up going into earnings and potentially helping things out today with Supermicro coming back from the dead. After rumors of being delisted, they had another strong bounce today as the company said they will keep their NASDAQ listing while the exchange reviews a plan to regain compliance. After a few weeks ago, their auditor Ernst & Young resigned. One of the worst things that can happen to a stock, stoking fears they've been cooking the books and other accounting and compliance irregularities, and the market's betting that they'll be okay. Up 31% today on a really strong dead cat bounce here. Given a little bit of a bounce to the entire semi sector, still a little anemic though, not much volume, but we did see some good bounces in the AI space in general. C3 AI. On news of a new alliance with Microsoft, up 24% today. Also giving smaller AI stock Big Bear AI a nice bump today and a bit of a bounce back for SoundHound AI as well. Along with the other company NVIDIA is actually invested in, Applied Digital Corporation. We just heard that in their latest Q3 Form 13F. NVIDIA's also taken a stake in this, in addition to SoundHound and a few other AI stocks. But what's once again gaining the spotlight is Bitcoin on its unrelenting march. Seems like $100,000 a coin is inevitable. Really strong momentum. Still got a lot of bullish seasonality in front of us. And ever since the election, it's just been absolutely lit on fire. And why shouldn't it? The biggest, most powerful government in the world set to closely embrace it, potentially even use it as part of the strategic reserve. Not to mention his own companies and admin personally getting involved in the cryptocurrency industry with the admin full of crypto bulls. Plus today was the first day of Bitcoin ETF options going live on a very busy day. Hundreds of thousands of contracts trading on BlackRock's Bitcoin ETF IBIT. And I wonder what that does to the underlying market of Bitcoin. If a lot of traders pile into out-of-the-money call options on IBIT, create a gamma squeeze, with the option dealers having to buy more and more of the underlying in order to hedge their short calls. This has the potential to give us the mother of all melt-ups, maybe the biggest of our lifetime. And so this part of the market is already very frothy. We've got MicroStrategy now with a market cap above 100 billion, even though they don't quite own 30 billion in Bitcoin. The underlying business of the company barely does 500 million a year in revenue. So the market's assigning a huge premium to MicroStrategy's Bitcoin holdings, more than 3 times the value of their underlying holdings, which is once again a sight to see. Up another 11.8% today, huge volume, 50 million shares. For a $430 stock, just a huge amount of participation and trading going on in this stock. And we're now getting articles like this on Seeking Alpha today. MicroStrategy could be a multi-trillion-dollar company, arguing that MicroStrategy is effectively Bitcoin's only investment bank, and the unique strategy involves issuing securities backed by Bitcoin, creating a significant value through a spread between Bitcoin's compounded annual growth rate and the fiat cost of capital. Its Bitcoin purchases are best thought of as revenue, and its rock bottom cost of capital are best thought of as costs of revenue. So apparently the whole fundamentals and rules of doing business have changed now by simply just piling into an asset, also called cornering, like the Hunt brothers tried to do in the silver market back in the 70s. Ultimately blew up in their face. And this isn't Michael Saylor's first rodeo either. He's actually an old hand at this game. Did a similar thing back in the late 90s with the tech bubble. Hyped up his stock really well and was actually cooking his books, recording revenue that he had not received from orders he was hoping to get. One of the biggest pump and dumps of all time. The market figured it out. Stock crashed over 99%. And believe it or not, MicroStrategy only took out those highs from early 2000 over the past week. But this time's different, right? And that's why he's got some investment advice for Warren Buffett. With Berkshire Hathaway currently holding $325 billion in cash, Michael Saylor said they are destroying $3 billion a month in shareholder capital. They are generating a 3% after-tax yield at best, and the cost of capital is 15%. Not sure where he gets that number from. Buffett can easily borrow at 3 or 4% if he wants to. Take 12% negative real yield, $325 billion times 12% is what the shareholders are paying for that, for which I really don't follow the logic there. However, he said if he had an hour alone with Buffett in a calm environment, I'd walk out and he'd say that this Bitcoin thing is a pretty good idea. Charlie would have liked it and we're going to buy some. Almost sounds like a 12-year-old kid speaking about his magic rocks. However, that's the thing. It's actually working for him again, 25 years later, after one of the biggest pumps in history. Like Peter Schiff said today, the higher the price of MicroStrategy stock, the more shares Saylor can sell. The more shares he sells, the more Bitcoin he can buy. The more Bitcoin he buys, the higher the Bitcoin price rises. When the price of Bitcoin goes up, the share price of MicroStrategy goes up. When does it end? And like I said, he'll do it for as long as the market permits him to do it, just as he'll keep on selling hundreds of millions of dollars of shares in MicroStrategy to anybody who wants to buy them as well. Just keep in mind, he's on the other side of this pump via selling shares, having sold almost 70 million just in the past 12 months. If he loves his company so much, why is he dumping on the market? And if you look into him, it's not just one of the greatest pump and dumps of all time back in the tech bubble. He's also been accused multiple times of being a tax fraud. He paid $40 million to settle with the Washington, D.C. Attorney General, and he was actually charged by the SEC for fraud back in 2000 as well. So like I said, so many people look up to this guy as their Bitcoin hero. However, he's anything but, in my opinion. But like I said, the pump is working really well for him this time again. The guy is a billionaire. In my opinion, doesn't actually create value in people's lives with an innovative product or service. He just goes on podcasts all day, pumping up the price of Bitcoin and hoping everyone else piles on top of him, like a classic pyramid scheme. The only question is, how long is it going to go on for this time? Because just keep in mind that MicroStrategy could indeed crash while Bitcoin actually holds up. Blockchain technology is real. However, how long can MicroStrategy retain a 300% premium over its Bitcoin holdings? I guess at the same time, no one wants to step in front of it and short it, because that's just as crazy as well. Anyway, interesting times indeed. And like I said, now that the US government's behind it, Bitcoin could very well hit $1 million a coin over the next couple of years. And I wonder what the world's going to look like in that scenario. Potentially also helping the price of Bitcoin today is the unfortunate news that Ukraine's just attacked Russia using US long-range missiles, just as President Biden gave them permission to do so. They didn't waste any time and looked to have struck an ammunition depot, which I really don't understand the strategy here. Current administration only has 2 months left in power. Why would they try and drag us into World War III before a new admin can potentially negotiate the end of this war and the end of all this senseless killing? We did get a bit of a reaction from gold, same with the bond market as well, and a little bit of a traditional flight to safety. Like I said, stocks gapped down, however the dip was bought, so stocks shrugged it off like it was no big deal, and gold bumped back up as well. Remember, the media was telling us over the last couple of weeks, ever since the election, yields are ripping higher because the new admin is going to cause a massive wave of inflation. But like I said, if that were true, gold shouldn't be coming off so hard then. Like I said, it appeared to me there was a bit of geopolitical risk premium coming out of the gold market as we were getting signs that the war could be negotiated away. However, after this most recent escalation, which the market saw coming yesterday, gold's bumped back up, which means it is trading on geopolitics here. And we did get a slight pullback in bond yields, but that dip was bought as well, only giving us a little bit of a bump up in TLT. But like I've been saying, long-dated treasuries aren't what they used to be when it comes to being a safe haven. A few years back, 5-10 years ago, on news like this, treasuries would rip higher. It was the go-to safety trade. However, I think gold's replaced that. And we did get a little bit of a bump up to start the day in the defense stocks. However, they didn't really hold on to those bids too much. Just looking at some of the biggest, Lockheed Martin did gap up there, but sold off once again, been trading really heavy in the last month. Same with some others, Northrop Grumman and especially General Dynamics, come off really hard this past week. And we didn't get a massive bounce from crude oil either. So what all of this tells me is the market did react to it, did give slight pricing and odds. Things could get worse. However, especially looking at stocks, seems to be a nothing burger, and the market's still confident that hopefully hopefully this doesn't spill over into something bigger and Putin doesn't use nukes, as I'd like to think he's just waiting to start formal negotiations with the incoming admin. And like I said, I really don't understand the strategy or objective of the outgoing admin's move here, maybe leaving us all with one final parting gift, hopefully not a bad one. But like Sven Henrich said on X today, the case for buying nuclear war headlines. If nuclear war unfolds, it won't matter as you'll be dead and you can't check your radioactive account. If there's no nuclear war, there will be a relief rally, which is a pretty good thesis really. But just moving on to the type of nuclear we like to talk about around here, and it's not war, it's nuclear energy. And this could be one of the very few areas of renewable energy that the new admin actually gets behind in a big way. And they could support further growth in the sector, and just like space, AI, and other important future sectors, could make America the leader in nuclear as well, especially with things like small modular reactors, microreactors. It's already a healthy industry and capital markets for these types of companies. And whilst the global clean energy industry as a whole has been selling off really hard going into the election, the market saw it coming, especially since the election, absolutely whacked the day after there. Doing a lot better uranium, actually pushing up against yearly highs here, with some ripping stocks within the sector. NuScale Power, under ticker SMR, small modular reactor, and other similar ones too, nano nuclear energy, pushing up again today. And so like I said, the new admin may not get behind wind and solar and some other clean energy technologies, but they could do so with uranium, which actually would give it more of an advantage over those other forms of clean energy. However, when it comes to solar and wind, the jury's still out. May indeed face a lot of headwinds in the coming years. However, we'll keep an eye on this, because now that Elon Musk is a big important part of the new admin, maybe we'll get surprised on this as well. But what Wall Street's really excited about with the new admin is potential for the corporate tax rate to get slashed to 15%, with potentially more tax incentives for domestic producers. In addition to tariffs, another way to change the economics for companies to incentivize them to bring production back to America. And so it's likely these tariffs are going to hurt the world more than America. Probably be a bump up in the prices of imports, but like I said, a lot of that is discretionary stuff, affects more the wealthy. The necessities won't have a tariffs on them. So like I said, if you're in the market for some electronics or anything else that's typically imported, you may want to buy the dip in Cyber Week or Boxing Day sales, as the prices of those things could very well start going up come Q1, Q2 next year. But the point is, tax is one of the biggest line items for most companies. So they reduce taxes, that's going to keep a good tailwind for earnings per share. Just keep in mind the difference this time from the late 90s, as we can see in this chart here. In the orange is 12-month forward earnings per share. Stock prices got so disattached from earnings back in the late 90s, and it went on for a few years. Junk stocks just trading 200 times sales. A lot of them didn't even have earnings. The difference this time is, yes, we're technically stretched, but what's also gone up like crazy has been mega cap tech's earnings. They dominate the world. Like I said, that's skewed a lot of the valuation metrics, not to mention COVID, where profits dived off a cliff. That skewed the Schiller PE, CAPE ratio, amongst a slew of other things. And one could argue there's a bubble in corporate earnings, which there is an argument to be had there, but that would mean all these global companies, NVIDIA, Meta, Alphabet, Amazon, would have to see a massive global recession or them no longer being dominant, which is kind of hard to see happening anytime soon. Certainly no European or Chinese companies will be overtaking at least the Western markets. And like we're seeing in NVIDIA's earnings, their 80% year-over-year growth justifies the multiple they're trading at this point of time. Of course, that's not going to last forever. Just nobody knows how much further it can go on for. We're seeing the market's continued response to moves by the new admin. Elon Musk reporting that the Department of Government Efficiency planning to release a free tax filing app, wants to make the process of filing taxes in America way more simple, pointing out that in 1955, there were less than 1.5 million words in the US tax code, which already seems like a lot. Today, there's more than 16 million words. Because of this complexity, Americans collectively spend 6.5 billion hours preparing and filing their taxes each year. This must be simplified. In my opinion, you could simplify tax greatly by just having everything 15% across the board. All income gains, services tax, just make it all 15%. But anyway, that's hitting the tax filing companies. H&R Block off 8.2% today. Intuit, whack, down 5% as well. Another large company involved in taxes. However, I wouldn't say they're going away anytime soon. What Dodge is planning, a bit more of a long-term threat, and that's even if they can pull it off. We also just heard Howard Lutnick is going to be the new Commerce Secretary, CEO of Cantor Fitzgerald. And this guy unfortunately lost 2/3 of his staff in the 9/11 attacks. Over 650 of his employees lost on that one day. He's a veteran Wall Street financier. He was potentially looking at the role for the Treasury Department. He's got close ties with the incoming president and should prove to be a key ally in enacting his political agenda. We're also waiting to see who he's going to pick for Treasury Secretary. Could potentially be former Fed Reserve Governor Kevin Warsh, and what will be another important role in the new administration. RFK is going to shake things up in the food and healthcare industry, bringing about big changes. On his Make America Healthy Again agenda, wants to introduce new limitations on food products, as well as bans on chemicals and additives. Wants to also limit SNAP purchases, all these packaged meals and snacks, and the market definitely appears to be discounting this. Conagra Brands sliding lower, as is Mondelez still, Kraft Heinz, and Pepsi as well. However, these may be getting a little overdone here. You can see Pepsi in this key support zone, 7.3% below the 50-day VWAP, quite a big move for the normally low volatile blue chip stock, 215 billion market cap, maybe setting up for a bit of a contrarian buy the dip here, at least as a swing trade. Definitely not a stock I'm interested in holding long term. We just heard from the largest US retailer, Walmart, beating again on sales, citing a resilient consumer, increasing their outlook. Now getting reports that even wealthy consumers are shopping at Walmart, looking to save a few dollars. Total revenue grew 5.5%, beating expectations. 27% jump in e-commerce sales. Again, amazing. A company the size of Walmart can put in those healthy double-digit numbers on e-commerce growth, as the secular trend from physical to digital still continues. Market absolutely loving it, trading up 3% to a brand new all-time high. This is one of the very few consumer staple stocks that's actually had a great year, because there's a look at the consumer staple sector as a whole. It's actually been coming off for a few months. And there's retail stocks just hanging in there as we approach the busy holiday spending period. And just before I get into some questions about my new swing trading alert service, just sharing with you some of the hottest stocks at the moment. Those eVTOL, electric vertical takeoff and landing stocks, catching a strong bid today. Archer Aviation up 16%, pushing up to multi-month highs. Same with Joby, big bump here today as we're getting a few analyst upgrades coming in. Where all the meme traders hang out, social media network Reddit, also on a strong tear. Former high flyer, insurance company Lemonade, ripping up since its earnings as well. This is one of those other high growth stocks knocked down from 21 that is based out and breaking out. Same with medical imaging company Butterfly Network, on a strong tear this last couple of months. It too, another former high flyer, basing out, breaking out. Also having a nice bounce back, Hims and Hers Health, up 12% today after we got news last week of Amazon trying to expand more in the telehealth market. Hims got knocked down, however it seems to have held on thus far. And that with a nice bump up in Intuitive Machines, helped my stock picks portfolio have another great day, actually up 2.5% after the market only finished slightly higher. Another great performing stock this year, Comfort Systems, ticker symbol FIX, in engineering and construction, ripping up to new all-time highs. Same deal with Powell Industries, another leading growth stock this year. And some software and cloud stocks. AppLovin, ticker symbol App. InnoData, up 7.8%. And Symbotic, having a good day after coming in with a really good earnings. Reported 9 cents in earnings per share. That's really good to see from this company, which is still early stage. And this is another interesting company I've got on my watch list. They're involved in warehouse automation, robotics, AI-powered robotic technology platform. Already got some pretty big customers there. And again, it's hard to see how this is not the future. It all comes down to who's going to dominate it when it comes to AI and robotics. And we'll once again be accelerating the secular trend of robots replacing humans. Like I said, the future is going to belong to those who own the code. And we're most likely going to have, at some point, universal basic income. So everyone that previously worked in these jobs, and everything from stacking shelves to driving a bus, who knows? Your dental work may be done by a robot 10, 20 years from now, possibly sooner. But no doubt, warehouse automation, which is already here. Amazon and others already using them in a big way for years now. This is just another interesting company operating in this space that could potentially be a leader one day. So like I said, really good to see them already come through with positive earnings per share. And there's a look at the long-term monthly chart on Symbotic. Had a big run up into mid last year, pulled back, but we're getting a nice bounce here. Current market cap, 22.8 billion. Okay, just moving on to some questions I received about my new swing trading alert service, due out this Thursday, the 21st. And just a quick recap for those that missed it yesterday. I'm starting another $1 million challenge. I've opened a brand new trading account, which I've deposited $30,000 into. Fired up, ready to trade. Going to send out my first swing alert this Sunday night to start trading next week. And so just like my stock pick service, I'll be sending out all my alerts the night before I trade them. So there's no need to be in front of the screen all day during market hours. Like I said, this is based off my own unique semi-systematic strategy, where I'll only be trading liquid large cap stocks and ETFs listed on USA exchanges, and all the swing trades are long only. Average hold time 3 to 4 weeks. And so I got a few questions yesterday I thought I'd answer for you guys, as I'm sure a few of you may be wondering the same things. So since I'm long only, someone asked me what happens in a bear market? Will I start shorting then? And so the answer is no. I'm not doing any shorting, no options, no leverage. It's always long only. And this kind of ties into the next question as well. Will I trade bonds and commodity? For which the answer is yes, in the form of ETFs. I'm only trading stocks and ETFs, for which I can access hundreds of different exposures in the commodity and bond space, not to mention strategy ETFs as well, and different factors, international markets. And that's why I'm only going to be long only, because just like back in 2022, S&P and NASDAQ finished down 30%, the energy sector, XLE, was actually up over 50%. And that's just one sector. So there's always a bull market somewhere. And since my trades only last a few weeks. Even in bear markets, prices wave up and down, offering up swing trading opportunities. So of course a bear market will be harder. I'm not saying there's not going to be a drawdown. However, through all my testing, even in a bear market, shorting is very difficult, comes with higher risks than going long, getting caught in a short squeeze. And through the power of diversification, along with ETFs, international stocks listed as ADRs, like I said, there's always parts of the market that are going up, and that's what I'm focused on. Someone wanted to see an example of what a trade might look like. And like I said, out of respect for paying members, I don't want to give too much away about the strategy. There is a video in the members area going into more detail about the strategy and what it's attempting to do. However, I can give you a quick example using the swing trading idea I gave out on this channel last week, Junior Gold Miner. It will be very similar to this. Liquid stocks and ETFs. This ETF trades about $200 million worth of units per day. So my swing trading strategy, which like I said, I'll show results of inside the members area, attempts to buy the dip, and then when a few weeks later, it attempts to get out if the asset bumps back up again. I do have predefined stop loss levels, but like I said, I don't want to give too much more away on the exit strategy, other than to say my swing trading strategy attempts to buy the dip on solid assets, using a number of indicators, which like I said, I've backtested extensively to help identify the levels that I'll be entering and exiting. Another swing trading idea I gave out a couple of weeks ago here on the channel, Philip66, is another example of what one of my swing trades may look like. Buying the dip on a solid stock, then exiting a couple of weeks later once it's reverted to some type of mean. And always carrying a diversified portfolio. That's where the discretionary part comes in. Because obviously I'm not going to fill my account full of trades in one sector. For example, the oil sector, and then something happens, all the trades go sour, so does my account. Instead, I want to have a good mix of assets, and I've got unique ways for measuring that. And like I said, with the hundreds of ETFs out there, even things like agricultural commodities, and even factors themselves, you can get a portfolio full of unique exposures, and that creates much less volatility and smoother results. And so my goal for my new swing trading account is starting with $30,000, contributing $1,000 every month. Although, like I said, that's not mandatory, as I do have a position sizing calculator in the members area where I can work out my optimal position size using my current account value. But my goal is to achieve on average a 24.1% return each year or higher, so I can turn the account into $1 million in less than 10 years. Which, like I said, I'm also doing a $1 million challenge for my stock pick service and the new account I started back in June this year. My target annual rate for that is 18% per year, and I'm already well ahead of it, not quite 6 months in. And so someone asked me, do I have to stay subscribed for the full 10 years? And the answer is no. You can cancel your subscription at any time. There's no lock-in periods. And in fact, that's the goal of this swing trading alert service, is I want to teach you what successful swing trading is by way of real-life demonstration. So the whole point of it is for you to learn a new skill that you can have for the rest of your life. And so whilst I can't give away the exact specifics and details of my trading strategy, I will explain it in more detail in the members area. However, after you've followed it for probably a year or two, you'll start to get a feel for it and how I manage a portfolio and what areas of the market I'm focusing on. And my goal is, like I said, you'll naturally get a feel for it. You'll be able to start trading the same way yourself and learn a lot and do it in your own unique way. So I've got no problem if you only want to stay a year or two, just get a feel for it and cancel. Like I said, I'm only going to sell 300 memberships, and after that, the door will be closed to new subscribers. So if one person cancels, I can just open the doors up again for the next person on the waiting list. And lastly, I got this question several times. Will I offer a combo of the swing alerts and stock picks into one subscription? And the answer is yes. I'll also offer 33% off on a combo package deal to get both my new swing trading alert service and my stock pick service as well. So like I said, stay tuned to the channel, and this Thursday on the daily market review, I'll give you the coupon codes for that and the link to get access into it. And the 33% discount is only for launch week until next weekend. Otherwise, if you've got any further questions, you're welcome to drop a comment under this video or send an email to me at support@clickcapital.io, and I'd be happy to help you. Otherwise, that's it for the daily market review today. Thanks very much for tuning in, and I'll see you again this time tomorrow. Cheers.